Hello! Welcome to my group's presentation on the strategic positioning of Dollar General. In this video, we'll be explaining and evaluating the strategic positioning of Dollar General, considering the social and cultural environment, how it may be changing, and its implications for the Dollar General's competitive advantage, and then providing our own unique insight as to the opportunity we see in this case.
When talking about a strategic position, a broad market strategy ensures greater operational effectiveness for Dollar General, as its success is deeply rooted in providing inexpensive basic goods to customers living in unprofitable and underserved markets. Controlled spending, strategically located stores, and a sufficient supply chain allows for this competitive edge. Based on Porter's 5 forces, it can be viewed that there is a lower threat for new entrants as well as substitutes due to its cost structure and convenience. Supplier power is moderate because the company sources supplies from various vendors. Buyer power is low because the customers in these rural areas do not have many other options, although rivalry in the discount retail business is high. From RBV theory principles, it can be said that Dollar General's efficiency in its supply chain and its market positioning are valuable, unique, and not easy to copy. This assures the firm's competitiveness within the industry. Now moving along to the social and cultural environment. There are external risks, however, there are many external opportunities. Increased demand for Dollar General stores from rising inflation is tempered by negative wage equity publicity and labor disputes that could damage their good image. In contrast, institutional theory suggests that other factors such as government power, social norms, and consumer behaviors affect the business operations of stores like Dollar General. Labor laws and zoning restrictions are overall regulation issues that make it difficult for these stores to expand, while culture determines how the customers relate to shopping. In terms of corporate social responsibility, criticism was directed at Dollar General regarding its treatment of workers and its environmental policies. Improving working conditions and adopting environmentally friendly policies would help the company's image and aid in its long-term success. To wrap this up, Dollar General's adoption of the low-cost leadership strategy provides it with a favorable competitive advantage in retail. Still, labor deficiencies coupled with increasing legal obligations pose issues that must be managed for growth.
Now we'll transition to the social and cultural factors and how they're changing with respect to maximizing Dollar General's competitive advantage. As illustrated previously, Dollar General performs well on its cost leadership and strategic marketing positioning. However, certain external factors are impacting retail. Stricter policies are starting to come into place from an institutional viewpoint. Governments are paying closer attention to wage policies, and some areas are establishing new zoning rules that slow expansion. These changes could prove difficult for Dollar General's growth strategy. Other manifestations of pressure, however, are expanding. The company has dealt with continuous criticism over its treatment of workers, particularly with respect to compensation and working conditions. If those issues persist, the company may have to alter its employment practices, which could improve sustainability at more cost in the short term. Many shoppers who have previously shopped with more value in mind are changing their outlooks as well. While the need for inexpensive shopping is still present, more socially aware and younger consumers expect companies to act responsibly when it comes to issues like employee treatment and ecological conservation. If Dollar General doesn't act accordingly, the company stands to lose a significant amount of brand loyalty from consumers who are more ecologically conscious. Addressing CSR, it's clear that Dollar General must reach a balance between efficiency and fair workplace rules. Workers' ethics is the greatest concern as of now, with criticism coming due to lower pay and understaffing. Addressing these issues by improving wages and working conditions could lead to a higher employee retention and better brand perception. Engagement with the community is also an important aspect. Some analysts are of the opinion that Dollar General does not engage meaningfully with the communities where it conducts business. The corporation could increase customer satisfaction and goodwill by adopting local initiatives and funding small enterprises, strengthening its social license to operate. Similarly, concerns regarding the environment are increasing. Global consumer spending habits are shifting towards more eco-friendly practices, and excessive packaging waste management practices by Dollar General could negatively impact its reputation. A shift towards more sustainable packaging materials could mitigate the regulatory risks and improve how consumers perceive the business. Now we'll go over the impact on competitive advantage. All of these changes represent both risks and opportunities for Dollar General. For example, meeting the expectations of better community contribution, participant-friendly employment policies, and environmental consciousness can result in increasing the customer base of socially responsive shoppers. This strengthens the long-term position of the company and creates new chances for new markets. On the contrary, not being able to meet these changes can damage the brand, attract fines, and bring more competition from companies focusing on socially responsible practices. Actively managing these issues will ensure that Dollar General retains its cost leadership while remaining competitive in a progressing market. In conclusion, the social and cultural factors relating to Dollar General are changing. Institutional forces, changing customer behaviors, and social responsibility issues are reshaping this environment. So to retain its competitive edge, Dollar General needs to find a middle ground between cost effectiveness and social accountability.
Dollar General's success story isn't just about how a single company, from humble beginnings, became a retail giant, but also about how it reshaped rural economies, often at the expense of small businesses. As stated in the video, a small grocery store in Haven, Kansas, called Foodliner, lost almost half of its customers when Dollar General entered their town, and after 3 years, had to close its door. This is quite common, with grocery stores losing about 30% of their sales when a Dollar General enters their town. This is due to their variety, convenience, and affordability. Porter's 5 Forces says that buyer power has a massive impact on these small grocery stores. Dollar General helps fit the budget of those low-income areas, but often impacts those smaller grocery stores who can't compete with their prices. While there are many benefits to having a Dollar General, such as low-cost goods, there's so many other negative impacts that affect these small communities. So, what is the real effect of these local grocery stores closing? Well, the first major issue is the harm to local economies. When local grocery stores close, employees lose jobs. And Dollar General unfortunately only employs about 2 employees per shift in their stores, which provides limited replacement for those staff working at independent grocery stores, which typically have about 10 to 20 people working. As well, unlike independent grocers, which reinvest their profits back into the town through local taxes and purchasing local goods and services, Dollar General directs their profits back to corporate shareholders and typically buys in bulk outside of the town. This provides little economic benefit going back into the community. This results in economic stagnation, a loss of job opportunities, and reduced local spending power. Another critical issue is the restricted access to fresh food. When Dollar General becomes the dominant retailer within these rural communities, citizens become reliant on their low-cost alternatives, which are often highly processed and are shelf-stable items instead of fresh dairy, meat, and fruits and vegetables. This shift contributes heavily to the declining community health, as people are left with limited options for a balanced diet. Over time, this plays a huge role in the increase of food-related illnesses, such as diabetes and heart diseases. This is also disproportionately affecting these small communities that don't have the income to pay for healthier choices. Finally, Dollar General's expansion often erodes at social and cultural hubs within a local community. Independent grocers aren't often just a place for people to shop. They're also deeply embedded within the community as a gathering place, but also often family businesses that have been passed down throughout generations. When these stores close, towns don't just lose a place to buy fresh produce, but also a part of their history, which was replaced by a corporate chain which has, unfortunately, no local ties.
So, what can they do? Dollar General must adopt a more responsible business model to maintain its long-term success. By forming partnerships with local grocery stores, sourcing fresh produce from nearby farms, and investing in community well-being, the company can improve its public image and foster sustainable economic growth. These efforts will not only repair its reputation, but also attract socially conscious investors and customers. This approach would benefit the communities it serves and enhance Dollar General's reputation as a socially responsible business. A commitment to supporting local economies could attract more customers and investors who value ethical business practices. Additionally, sourcing from nearby farms would reduce transportation costs and provide Dollar General with a more sustainable supply chain. As a result, local grocery stores could remain competitive by selling fresh food in collaboration with Dollar General rather than being forced out of business. By strengthening community ties and fostering economic sustainability, Dollar General could expand its influence while maintaining long-term profitability. Additionally, by tapping into local economies they would be encouraged by other rural communities to expand their reach and help out other local businesses, increasing their sales and their influence, and making themselves even more intriguing to shareholders. Overall, by actively collaborating with local businesses and sourcing from nearby farmers, Dollar General can lower its costs while ensuring that fresh, affordable produce remains accessible in rural communities. This approach would not only strengthen its brand as a socially responsible retailer, but also foster long-term economic sustainability in the areas it serves. By integrating local products into its supply chain, Dollar General can create a win-win scenario, enhancing its profitability while supporting communities. So, to conclude our presentation, Dollar General's ability to create opportunities where other companies weren't able to played a key factor in its success. Through being able to build a business that could survive and even compete where others couldn't, Dollar General has become an integral part of the communities it provides to, almost directly manipulating how their economies operate. As such, Dollar General has become responsible for the communities it serves and has the opportunity to either sustainable business practices mentioned earlier or continue down its current path, which is doing more harm than good to its communities. Thank you for watching our video.